Morgan Stanley just wrapped up a very important Japan summit last week. Just give us a sense of the flavour and the sentiment there.
Well, I think the key thing that was being debated is the exit from deflation, the reflationary environment. And our view is that that is now secure. And so we're well into a process of monetary policy normalization. And for some considerable time, Japan has been delivering strong earnings growth relative to the rest of the region and improving corporate ROE. So a lot of the conference was actually about the micro, about investors meeting companies and hearing about their plans for the future, and particularly on the domestic side, how they're going to take advantage from this reflationary environment.
It's not all hunky, if you forgive me, it's not all hunky-dory, though, in the Japanese economy. We were speaking to Jesper Cole earlier on, and he said, look, the consumer needs to be part of this recovery, and he and she, Mr. and Mrs. Watanabe, are not. Is that the sense that you are getting? And as long as that remains the case, is the BOJ not going to be in a hurry to exit?
Yeah, there were production interruptions in the first quarter. There was a major earthquake right at the start of the year. And it's true that at the low end of the household sector, the weak yen and relatively high commodity prices is making things difficult in relation to disposable incomes. But overall, wages are growing around 3% plus, which is ahead of where we think inflation is. Inflation's trending back down to the low twos at the moment. And indeed, like everywhere else in the world, there are parts of the economy that are doing incredibly well, particularly the semi-tech hardware sector, where wages are very strong and where we're having this very big build-out in terms of semiconductor fabs and things like that.
So, John, you mentioned exit is underway by the BOJ. I want to get your take on how smoothly or not that is going, though, because we were just showing folks dollar-yen, we're about 157, and their 10-year is at 103 basis points. I mean, it shouldn't be that way. And then I remember late last week, one of the most recent Rinmon bond buying operations, right? The BOJ is used to being able to buy whatever it wants, right? In this case, though, for the first time in probably, well, since 2013, some people think first time ever, they weren't able to do that because the market was saying, no, don't want to sell to you. What does that say?
Yields are heading up in Japan, whereas, for example, in China, they're heading down. In fact, that's a sort of mega trend, the sort of deflationary environment in China, the reflationary environment in Japan. So that sort of 2% number that I mentioned where core inflation is, and that's a reasonable level to which 10-year yields will probably be headed over the next 2 to 3 years. Yeah. And the yield curve will probably assume a normal, positively sloped shape. And that's quite important for the banks and insurers, actually, which have already guided to around 10% earnings growth this year. In a more normal yield curve environment, everything essentially allows the financial system to function again.